Hey there, this is Stocky. In this video, we are going to see what are the different ways to invest in gold, which is the best way to invest in gold and a trick to get double returns on it. This video is packed with full of information just for you guys. So, don't go anywhere and watch till the end. Let's go. Investing in gold offers various avenues, each with its unique features and considerations. Physical gold, whether in the form of jewelry or coins, holds sentimental and aesthetic value. However, it comes with additional costs such as GST and making charges. Let's see an example. Here we are seeing Kulyan Jewelers website just to show you how the cost is divided. For this bangle, the total price is around Rs 55,000. Making charges itself comes around 10,000 and GST is fixed to 3%. So, you see, to buy 7 grams of gold, actual price is 43K, but including other charges, it comes to 55K. An alternative approach for investment is purchasing gold pieces instead of traditional forms, offering flexibility and potentially lower expenses. It means no making charges and all. Well, this video is not about how physical gold rate is processed, but this was just for general knowledge. Let's move on to the next way of gold investment, digital gold. Digital gold presents another option, allowing investors to buy and store gold online without the physical possession. Companies like MMTCPAMP, Augmont, and SafeGold offer digital gold, providing convenience and security. While MMTC is a government company, other two are private companies. These three companies store the digital gold worth your invested amount in the safe. These all are unregulated companies, which means that SEBI in any way is not connected to these companies and hence will not take any responsibility. Well, one more thing is that these three companies are great. But let's say there is one more fourth XYZ company which is new. It has the capacity to store 100 kilograms of physical gold equivalent to digital gold. But for profit purpose, they are accepting all the orders, which might go up to 200 kilograms gold. So, we won't even know really whether they have stored our share of gold or not. But, in any case, these three are very good and trustworthy companies. So, this was just an example for some imaginary company to cover possible scenario. Coming back. You can demand physical delivery of this gold, but then you need to go through extra charges along with the making charges as well. No minimum investment required, so you can buy 1 to 2 Indian rupees worth digital gold as well. To buy digital gold, you can buy it using any usual app. But it is not the app that sells gold, but the company does. While it eliminates making charges and storage concerns, there are challenges such as a 3% GST, 3 to 6% spread costs that cover storage cost, insurance cost or profit margin, and while selling this digital gold also tax and spread needs to be paid. There is an absence of an indefinite holding period. Investors must decide between selling or opting for physical delivery after a specific period of time. We also need to pay capital gain tax. Another way of gold investment is SGB. Sovereign gold bonds, SGBs, issued by the RBI, multiple times a year, offer a unique investment avenue. You need to apply between specific issue dates mentioned by RBI. Unlike physical gold, SGBs are paper-based worth gold rate and not physically backed by gold. So, these are bought and sold at the gold rate. So what is special about it? In general, these bonds provide a secure and risk-free option, exempt from GST and with no charges. Apart from this, if you apply for SGB online, you would get 50 Indian rupees per gram discount. The good thing is that investors receive a 2.5% annual interest for just holding these bonds. Now please note that this is a simple interest. It means that you get a fixed amount of interest on your investment every year. So you get 1.25% interest for every 6 months, that is 2.5% every year. But this interest is not tax-free. That's okay. After so many offers in your favor, this one thing to pay is fine. with a minimum investment of 1 SGB equals 1 gram of gold and a lock-in period of 8 years. So, you need to redeem your profit from RBI, which is tax-free after the maturity. Early redemption is also possible after 5 years by RBI if you wish so. After 5 years of lock-in period, you can even go for multiple redemptions like once in every 6 months, that too tax-free. Isn't it great? RBI says if you can't wait even for 5 years, then enter DPID of your broker in the application form for SGB, and your trade will be shown in the holdings section of your broker app. It means you can now buy and sell it like stocks itself. If you sell your SGB on stock exchange, then there is only one case where you need to pay tax on your capital gain, depending on long-term capital gain, LTCG, or short-term, STCG. I mean, what about the person who buy that SGB from you through stock exchange? If he holds that till maturity and redeems from RBI, then no tax. But if he sells that SGB further on stock exchange, before the lock-in period, then he needs to pay tax. Simply, if you get your money from RBI after maturity, you don't need to pay capital gain tax. Many of you might be thinking how to buy SGB, so here is the explanation. RBI announces dates on their official link where they mention when the SGB will be issued. So usually it will be like 3 to 4 days from them when you can buy, and after 1 week it will be visible in your demat account. So, if one issue is open now, then next month they will open another issue, and then next month one more. So you can buy it in a relaxed manner. You just need to have a demat account. So you can apply through stockbroker or online net banking. Process is the same, 50 Indian rupees per gram discount in both cases. For example, for Zerodha broker, you need to log into kite.zerodha.com. Click on bids. Click on government securities. Click on place bid. And that's it, process is completed. The bidding window to apply fresh SGBs will be visible once the issue is open and closes on the final day of the subscription period. SGBs usually opens on Monday by 6 a.m. and closes by 3:30 p.m. on Friday. This duration may change subject to exchange timings and trading holidays. I have already explained how to buy SGBs. But if you are thinking, can I enter any amount in the limit available with me randomly while buying? Then the answer is no. You need to enter the amount by calculating that you wish to invest and click on place bid. Just enter number of grams, that is quantity. If 3 SGB units allotted, it will be equal to 3 grams of gold. If, currently suppose 1 gram gold rate is Rs 5,876, then for 3 it will be Rs 17,628. The order will be placed on the last date of subscription window. So remember to keep sufficient balance in Zerodha account or else order will be cancelled. Now, let's discuss the trick that people are able to sell SGBs for 5 to 10% extra rate or buying with 10% discount rate. The secret is in broker app itself. It's nothing but to put a limit order in stockbroker's app where number of buyers and sellers are very less, so less liquidity for SGB specifically. Here is a tip, use limit order at such a price that it is near to the real physical gold price for safety, where chances are that you avoid heavy losses and take profits just like that. Next path to invest in gold is ETF. Gold ETFs or exchange traded fund, regulated by SEBI, are mutual funds that mirror domestic gold prices and can be bought and sold on stock exchanges. These funds eliminate GST and spread, also no lock-in period for ETFs. So you can hold it for indefinite time. But corresponding AMC asset management company that pulls money from various investors for investing in various securities will charge you certain expense ratio, min 0.1%. Also there is taxable capital gains and difficult to sell due to low liquidity. Still, they differ from digital gold as they represent actual gold and are regulated, providing safety. But, one big disadvantage is that minimum you need to hold 1 kilogram of gold. One more way of gold investment is gold mutual funds. Gold mutual funds operate similarly to ETFs but invest indirectly through gold ETFs. It means that they take your money and invest in gold ETF only. So product is same but investment method is different. One needs demat account while other need mutual fund app. With a minimum SIP investment as low as 100 Indian rupees, they offer a convenient way to access gold investments. The underlying asset's value is directly linked to changes in gold prices. Both ETFs and mutual funds contribute to portfolio diversification and liquidity. Again, mutual funds charge expense ratio, and you need to hold cash while executing by position. Once you sell this gold, you become liable for tax within taxable limit. In essence, each gold investment avenue has its pros and cons. Physical gold appeals to those seeking tangible assets, while digital gold provides convenience. SGBs offer security and interest, and gold ETFs and mutual funds cater to investors looking for regulated and liquid options. The choice depends on individual preferences, risk tolerance, and investment goals. But the best one after all this analysis, anyone can say that it is SGB. Since it has no GST, no making charges, no spread, you get discount and interest paid for just holding bonds with a small tax. What else benefits can any kind of gold give? The second best would of course be ETFs and mutual funds, since both go hand in hand. And then the rest come in line. That's all about gold investment. See you next time with a new topic. Till then, keep investing and keep learning.